Hey, what's up everyone, and welcome to the School of Personal Finance. The housing market, it just feels broken. Who could have ever predicted what would have happened over the last few years? And now you hear people calling for a market crash and how terrible it's going to be. So in this video, I'm going to try to make sense of what's going on in the current housing environment. I'm also going to talk about 4 things that we need to be watching throughout 2022 to see how it all plays out. I hope that you find this one helpful. Let's get to it. All right, so real quick, I've been working hard on building out my education center where you could come and learn about all different personal finance topics and become great with money. So head over to schoolofpersonalfinance.com and enroll today. I have a soft launch where it's only $97 for lifetime access as I continue to build out the content and community. So go check it out. All right, so here we are, April 2022, and this housing market, it is showing no signs of slowing down. It is still on fire. But now one big thing that's in the news all the time, and the major reason why so many people out there are calling for a market crash, is because of interest rates going up. So as of right now, interest rates are the highest level that they have been since 2018. And we could see a Wall Street Journal article that was just published showing that the average rate for a 30-year fixed rate loan jumped to 4.67%. So if we look at this little chart right here, we can see that back in January of 2021, rates hit a low of 2.65%. So we've come up a lot since then. And a lot of experts out there seem to believe that these rates are just going to continue to go higher. As the Fed continues to raise rates, that we're going to see higher and higher mortgage rates hitting 5% soon, and some people are calling for a 6% mortgage rate in the not too distant future. Now you also hear people out there say that for every 1% that mortgage rates go up, you should see housing prices come down around 10%, but history has not shown that. It really has not worked out that way, and I don't think that this time is going to be any different. I don't see home prices dropping 10% because of the increase in interest rates. The truth is that people are in very strong financial positions right now, and the economy is strong. Incomes are up, unemployment is very low. There is a lot of liquidity out there that's been pumped into the system over the last 2 years, so people are able to pay more for these houses, and so far the higher interest rates, it hasn't stopped the demand for the purchases of these homes. So a strong economy can continue to support these higher mortgage payments. The question is for how long, right? If these mortgage rates continue to go up, you would think that at some point there is going to be a decline in the people that can afford these homes and prices will eventually come down. But we just don't know how long that will play out, because right now people seem to be able to pay more than asking price, and the increase in mortgage rates, the increase in their monthly payments, they have the income to sustain it. But now I do want to show you a very simple example of what a difference it makes from 12 months ago to right now if you're going to purchase a home. Because not only do we have higher mortgage rates than a year ago, but home prices across the country on average have gone up almost 20%. So if we look at a simple example, let's say that 1 year ago you were going to go buy a house for $400,000. In that case, you'd have to put 20% down, right? So let's say you would have need to save for a down payment of $80,000, and then you get a mortgage for $320,000. If you do a 30-year mortgage, right, at rates a year ago where they were around 3.5%, your monthly mortgage payment would be $1,437. So if we fast forward to today, that same exact house is up 20%. So instead of it costing you $400,000, that house now costs you $480,000. And instead of you putting $80,000 as a down payment, you'd now have to put down $96,000. So you'd have to have more liquidity. You need to have saved more money to be able to do it. And now instead of a mortgage for $320,000, your mortgage would be $384,000. And the rate, let's say it's gone up 1% from 3.5% up to 4.5%. That would make your monthly mortgage payment $1,946. So this is a difference of a little bit over $500 a month, just if you would have waited 1 year before buying a home. Now these rates, they are not sustainable. So I am not saying that I think that home prices are going to increase at the same pace that they have been increasing, but home prices typically do not go down. Like, yes, I lived through the Great Recession of 2008, 2009, where it was painful and home prices got clobbered across the country. But other than that, and that was for many different reasons, right? For the lending standards, just many different things going on in the economy. We were not at the same place that we are now. But typically, home prices, yes, they don't go up this much, but they also don't really fall. So if anything, what I could see being realistic is just that the rate of increase is going to slow down dramatically. So if we go back to some kind of normalization where home prices go up, 3 to 4% per year for the next few years, I could see that as happening. And maybe in some areas we will see a price drop in some of the very high priced markets. But overall across the country, I don't see a housing crash coming anytime soon. And then the second thing that we need to watch real closely, and this is what I think is going to be the main driver of prices throughout 2022, and this is where the real crisis is in the housing market, and that is inventory levels. There are just no houses for sale. People are not selling their houses. So when you have, it's pure economics, when you have high demand and very, very low supply, it just forces prices to go up and we get into these bidding wars. We've all seen that viral video, I think it was in North Carolina, where just a regular open house, it wasn't anything fancy, and there were cars lined up down the block, like 50 cars to come see this open house. It's craziness what is going on out there because there is such limited supply of homes. So, Redfin has a ton of great data. It's a great website where you can just go and look at all these different market trends and all these data points. So if we look at inventory levels from 2012 up until now, look at this trend. It is absolutely amazing. And right now, we are by far at the lowest levels that we've ever been. So in February, 553,000 homes for sale throughout the nation. If we go back and we just look at, like, say, pre-pandemic, if we look at, and this is adjusted kind of seasonally, but if we look at September 2018, there was 1.7 million homes for sale. So that is crazy, and that is a real reason why these prices are getting bid up. And now there are a few different dynamics at play here that led us to this low inventory level that we currently have. One of them being the Great Recession, where many of the builders just got obliterated during that time and they never came back online. So we've been building under where we need to be for like a decade now. According to Realtor.com, we are like 5.8 million homes undersupplied right now. And then you take into account the supply chain issues that we currently have in builders not being able to get the materials and keep up with the demand and being able to build all these homes that are scheduled to be built. And now the higher mortgage rates are also contributing to this low inventory level because people don't want to give up their 3% mortgage. They're not moving. They would rather add on or do home improvements and just enhance their current living space rather than go and buy another house when they might be facing a 5% mortgage rate. And many people that I talked to recently, if they are thinking about moving, they're looking at maybe keeping their home as a rental property. So that is another piece that comes into this, is that people are looking at it like, you know what, my home is a great store of value. It's a great inflation hedge. If I could turn it into a rental property and go into a different home, then I might want to do that. If I want to upgrade and get more space, then maybe my condo or my, townhouse would be a great rental property, and I'm not going to sell it. I'm going to keep it. So more and more people that I talk to, they're in the situation of wanting to upgrade. They are throwing that thought around and maybe becoming a landlord and keeping it as a rental property. So low inventory levels, it is a big problem out there, and it is causing these prices to stay elevated. So as you can see here on Redfin, 1.3 months of supply nationwide in the current housing market. So we are at record low inventory, record low months of supply. This chart says it all. And then the third thing that just seems to be so strong right now and not going away, and that is home buyer demand. So we have the age range of like 30 to 35. It's our biggest demographic, and they're all going into their home buying years. They want to buy homes. People want more space. They're starting a family right now. So that demand, it is there. And then even beyond that, we have the institutions who have shown over the last year or so that they are willing to just go in and just buy in bulk. Any homes are for sale. So I feel like we have this floor when it comes to demand that we're not going to go below, because people want to own real estate right now, especially with inflation going on, as an investment, as a place to live. All of these reasons, homes are going to stay in high demand. We're working from home, we're exercising from home. More and more is going on inside of your house where people want to buy homes. And we're starting to see a shift into the lower priced or the more affordable types of homes. So like condos and townhomes are exploding right now. So there was recently an article on Redfin about this. So this just came out a few days ago saying that condo prices jumped to record highs as buyers seek relative affordability, and that the typical US condo sold for a record $319,000 in February, up 14.6% from a year earlier. And that during the pandemic, it was single family homes that surged, but now because everybody's getting priced out, they're moving on to the condos. Now, maybe this won't be there forever, but in the current environment, the demand is just not going away. So maybe if interest rates really go up, maybe if the economy falters and we go into a recession and people start losing jobs, then the whole dynamic could change. So we need to keep an eye on that. But in the current environment, it just seems that this is going to continue at least through 2022. Foreclosures remain at very low levels. Home equity are at record high levels. People were afraid that once the mortgage assistance programs and the stimulus all wore off, that we might see a flood of foreclosures come to the market, but it just hasn't happened. And we have that institutional buying as a backstop for any inventory that did hit the market where they just come in and sweep them off. The demand, I just don't think it's going away anytime soon. And then the fourth thing that we need to be watching are rent prices. So now rents, they usually lag home prices. So when we see a big increase in home prices, it usually takes at least 12 to 18 months for rent prices to catch up. And that's because rents, you're typically locked into a lease. So once that lease comes up, that's when the landlord goes ahead and tries to increase the rent. So we're starting to see that now. Year over year, rent prices have gone up around 20%. So it's not even like you could sell your home and decide to become a renter and get a big discount by doing that, because rents are going up and there's the fear that they're going to continue to go up. So having the security of being locked in to a mortgage where you know exactly what your costs are going to be, that is becoming very appealing to people. Now, increasing rents, it also causes people to stay put. Like I have a bunch of rentals, and the people that have been in units for a while, I don't want to go ahead and increase their rent so much to piss them off to where they're going to want to move out of the house. The worst thing for me as a landlord is to have a turnover where I have to go in and put money into getting it rent ready again, and maybe having a couple of months of having no tenant in there, no income coming from it. So I want to keep my tenants happy in there. I'm not going to just jack up their rent on them. So for this reason, a lot of people are just staying put because maybe they're locked into a 2-year lease, or maybe when their lease comes up, they get an offer to just renew the lease with only maybe a 3% rent increase, where they know if they leave and they go somewhere else, they're going to have to pay substantially higher. So this is another reason that people are just kind of staying put where they are if they have that as a possibility. So now when you take all these things and you put them together, my first thought is it's a very difficult time to be a first-time home buyer. If you're waiting for home prices to drop 20% before you step in and buy a house, you might be waiting a very long time. It just might not happen. And also, if you're going to be buying your first house, you want to make sure that you are on very solid financial footing. You want to have that 20% down payment. You want to have ample reserves in the bank. You want to be able to withstand if we do go into a recession and now you're locked into this high mortgage payment that maybe you weren't thinking that you would have to be paying every month. I mean, one thing that could happen is that interest rates could come down in the future. So if you do end up buying throughout this year, even if it's at high prices, at least you lock that price in, and your interest rate, even if mortgage rates are higher, we could reach a point where mortgage rates start to come down. Like, it's going to be hard for the Federal Reserve to continue on their path of raising rates without really tanking this economy. So mortgage rates, they might come back down. And if that does happen, then at least you have an opportunity to refinance your mortgage and bring that cost down. But overall, it's just a very difficult time if you are out looking to purchase a home right now. All right, everyone, that is it for this one. I hope that you found that helpful. Please make sure to hit that like button if you enjoyed this one. Subscribe if you are not subscribed already, and I'll see you again in the next one. Thanks.